tightening monitoring equitization. And in our crosstalk, real estate remain attractive for FDI inflows. Hello there, you're tuning into another edition of Bizline on VTV International. I'm your host Hoàng Hằng, and we will now begin with some economic highlights over the past week.
Deputy Prime Minister Vương Đình Huệ on Wednesday chaired a conference with the Steering Committee for Enterprises Renovation and Development to review state-owned enterprises' process of equitization and business development last year. Data released in the conference show that the number of SOEs has decreased sharply. There are more than 500 SOEs in the country and are expected to fall to 150 in the next couple of years. Last year, the government collected over $6 billion, 15 times higher than book value. In order to further accelerate the process of equitization and withdrawal of state capital, Deputy Prime Minister directed relevant units to closely monitor land use before and after equitization. He also stressed that to promote transparency, the process of equitization must be attached to the process of listing on the stock exchange.
Nearly $900 million in foreign direct investment was poured into Vietnam in the first 20 days of January. This was stated by the General Statistics Office. Of the total FDI, $442.6 million was put into 166 new projects. With about $147 million, Singapore was the largest investor among the 23 countries and territories investing in Vietnam, making up 33.4% of total FDI, followed by South Korea and Norway.
The State Securities Commission, or SSC, requires that securities business organizations do not participate in consultancy, brokerage, distribution, transactions of digital money as well as other financial technology products and comply with anti-money laundering laws. According to the SSC, these are new products that have not yet been regulated by the law, thus there are many risks. As a result, the agency wants investors to be cautious when investing in these new products to limit potential losses. At the same time, it is required that public companies in the fields of financial technology must fully comply with the law on issuance, capital mobilization, and disclosure of information on these products.
According to the Vietnam National Administration of Tourism, the number of international visitors to Vietnam in January increased sharply by 42% over the same period last year. In particular, the number of visitors from South Korea increased by 84%, followed by China. European visitors also increased by nearly 23%. According to experts, one of the reasons for this impressive growth is the effective implementation of long-term strategies by the local tourism industry. This year, the industry aims to pass last year's record of 13 million international visitors. Positive numbers at the beginning of the year are considered a good sign for this year's development.
Vietnam can fully meet Qatar's demand for tropical fruits, according to the Ministry of Agriculture and Rural Development during a current meeting with the Belgian company Rent a Port. This investment company is currently helping Vietnam promote fruit and vegetable exports to Middle East countries, starting with Qatar. Aside from current key exported fruits, Vietnam is also home to other popular types of fruit, such as bananas, grapefruit, dragon fruit, and mango, as well as durian and coconut. The Ministry of Agriculture and Rural Development has pledged to help Rent a Port meet and cooperate with major partners in Vietnam.
Those are some highlights in the economic scene. Up next in our crosstalk, we will talk about the prospects of FDI attraction into the Vietnamese real estate market in 2018. Last year, Vietnam remained an attractive destination for foreign investors, with total FDI capital registered in the country hitting a record high of $35.88 billion, up 44% against last year, in which real estate remained the third largest FDI lure of the country. The sector saw a robust amount of FDI inflows on the back of improvements of infrastructure and administrative procedures. But will this momentum continue for the real estate market in 2018? And what segments will lead the market this year? This week's episode of Bizline will tell us more. But first, let's take a look at some impressive figures of last year's FDI into the real estate sector in the following clip.
Statistics released by the Department of Foreign Investment and the Ministry of Planning and Investment have revealed that in 2017, Vietnam remains an attractive destination for foreign investors. The processing industry and manufacturing sector continue to attract the largest FDI, followed by power production and distribution and real estate. 2017 also saw a record high reached for FDI in Vietnam's real estate market in the last 10 years, reaching more than $3 billion, accounting for 8.5% of total FDI into the country. Although not exceeding 10% of the total registered capital, FDI in the real estate sector has continuously increased over the past 5 years. Previously, investment capital in the real estate sector focused on the southern market. However, according to CBRE, since 2017, many foreign investors have also paid attention to properties in Hanoi.
We have invited to our studio today Mr. Matthew Powell, Director of Savills Hanoi, to talk a little bit about this topic. Thank you so much for joining us.
Thanks for having me.
Now, after many years of being the second largest FDI lure of Vietnam, the real estate sector actually dropped to third place in 2018. So what is the reasons behind such change?
It's less of a drop, it's more that the FDI figures have seen such a massive increase. So we saw a 44% increase during 1 year, which is huge. So Vietnam is performing very well in terms of GDP, FDI growth in the region. And a lot of that is still pouring into real estate. The reason why it's dropped slightly is really just because of the rise of the manufacturing sector. So there's been a massive increase into the FDI investment into the manufacturing sector in Vietnam. And this is, I think, accounts for around 35% of the total FDI. So the real estate, while it's dropped back 1 or 2 places, it's still seen a big increase in total dollar value over the last few years as well. So not really a concern for the real estate sector, more of just a positive news story and positive conditions for the rest of the investment market. So
do you think the real estate sector will remain an attractive segment for the foreign investors in the coming time?
Yeah, absolutely. So at Savills, we're meeting foreign investors and developers constantly, and we're seeing a lot of interest. So even in the last, since the beginning of the year, just in 1 month, we've seen a lot of new interest, both from established foreign investors here who are looking to expand their portfolio, expand into new developments, but also foreign investors looking now from further afield. So traditionally it's been more the Asian investors and developers have been focused on Vietnam, but we're now seeing more and more Europeans, investors from the US, Australia, for example, and much further afield. So the fundamentals still remain very positive. Vietnam is very well known internationally in the investment community now, so everybody wants to have a piece of the Vietnam action.
Previously, FDI mainly concentrate in properties in the southern of Vietnam. So will this trend expand to include Hanoi and the northern region as well?
Yeah, absolutely. Hanoi as a city province currently accounts for around 8% of the total FDI. If we include that to neighbouring provinces, for example, Bac Ninh and Quang Ninh, for example, it's going to be much higher in terms of the investment. So a lot of that is driven by manufacturing. So we have around 60 industrial zones and within 3 hours of Hanoi. So a huge amount of that investment is coming into the northern part of the country. If we looked at real estate in particular, we're now seeing that given that Ho Chi Minh City is such a competitive market, there's been a lot of real estate development, particularly in the residential sector. A lot of the developers that have been very active in Ho Chi Minh City, for example, are now really moving their attention towards Hanoi. So I think Hanoi is going to be very active in terms of development and acquisitions, M&As for foreign investors and foreign developers this year. We're aware of a very large number of projects. Companies that traditionally more focused on the southern areas are now really focusing their attention on Hanoi. Hanoi's got a very good news story. There's a huge amount of demand still, particularly in the middle income sector for residential housing, landed properties. If we looked at the hotel sector, for example, we have very positive figures for tourism growth in Hanoi, the northern part of the country. Hotel performance has been performing very well as well. There's been some very large announcements. We have a huge Japanese investment in the Dongyang district, so I believe around $2.5 billion US. We have more of the Asian developers, such as those from Singapore or Japan or Malaysia, who are really expanding their presence in Hanoi. So Hanoi is definitely one to watch.
2017 saw a record high of FDI in Vietnam's estate market in the last 10 years, reaching more than $3 billion US. According to experts, this trend will continue in 2018 thanks to positive GDP growth and benefits from trade agreements.
Cái lý do mà nhà đầu tư nước ngoài có cái sự tăng đột biến trong cái FDI và bất động sản này, đấy là cái kỳ vọng của họ vào cái tăng trưởng kinh tế. Một lý do thứ hai là cái thay đổi về khung khổ luật pháp, vì cái luật nhà ở và luật kinh doanh bất động sản vừa có hiệu lực năm 2015 có những cái độ mở thông thoáng là rất nhiều cho nhà đầu tư, đặc biệt là nhà đầu tư nước ngoài.
We have now had a lot of products, options for investors to choose from. We have a number of developers, experienced developers, local developers and international developers as well. We have a more mature legal framework. We already allow foreigners to buy into residential products into Vietnam.
But who will the leading investors be in Vietnam real estate market? Let's find out more from expert forecasts.
Năm 2018 sẽ tiếp tục là những cái năm đầu tư mạnh của các doanh nghiệp đến từ Hàn Quốc, Singapore và những nước trong cái khối ASEAN như là Malai, như Thái Lan.
The top three countries are usually the same. They may exchange places, but Japanese, Korean and Singaporean. We're now seeing a lot more investment from China.
Trong 2018 thì vẫn là các cái nhà đầu tư từ Nhật Bản, Hàn Quốc và Singapore, bởi vì họ vẫn là những cái nhà đầu tư chiến lược từ trước nay ở Việt Nam.
Experts also share their high expectation for the CPTPP and many other free trade agreements that are expected to help further develop Vietnam's real estate via other sectors, especially manufacturing.
Now, we've seen a rising trend of investors from Japan, as you mentioned, and also from other Asian countries such as Korea and China entering the real estate market in Vietnam. In your opinion, what has attracted these foreign investors to the market?
So if we look particularly at Japan, there's very limited investment return opportunities for them in Japan. So Japan particularly has been very active in looking outside Japan, and Vietnam has been a major focus for them. Again, because of the fundamentals, they see the huge potential in the market. They see the fundamentals of the demographics, very stable political situation, and growing confidence and growing consumption power in Vietnam. So they see, just from a purely financial point of view, they see much more potential in Vietnam than some of the neighbouring countries, and particularly at home where they're getting much lower returns. If you look at China, for example, they've been very active coming to Vietnam. You have a very perhaps oversaturated market in some of the cities in China, and now they're really looking to countries in the region such as Vietnam, where they can achieve some of those higher returns and implement some of those projects. So I think it's a combination between push factors from their home countries, and that will be different, whether it's China or Japan or Korea, for example, and certainly very strong pull factors, which would be, let's say 60-70% of the reasons why they're coming to Vietnam.
Now, how is their involvement going to affect the market as well as the structure of the projects that's currently taking place in Vietnam?
foreign investors, they bring a lot of experience. Typically, they've been very successful in their home countries, and that's the reason why they're looking at markets like Vietnam. So, what do they bring? They bring fresh ideas, established procedures, good construction quality, good architectural design, and injecting a lot of ideas and good quality into the Vietnam property market. A lot of this has been, reflected in what we see from Vietnamese developers as well. Quality across the board has risen. So developers and companies learn from each other and learn from various projects and can implement these new ideas. What we've seen, which is quite interesting, is that actually that Vietnam has gone very quickly through the development process. Many countries, if you look at my own country, the UK, it's what's taken us sort of, let's say, 150 or 200 years even. Vietnam's piggybacking and learning off the experience of many different countries and many different developers and going through that learning process very quickly. So that's partly what's so exciting about the Vietnam property market and investment climate in general, is this it's absorbing and bringing, using all this information and really skyrocketing through to the next stage. So that's what's very exciting about the property market.
According to the Department for Economic Zones Management, Ministry of Planning and Investment, in 2017, Vietnam has 328 industrial zones. Among those, 223 came into operation with an occupancy rate of 73%, the highest rate is ever reached. Experts attribute the development of industrial real estate to the growth of manufacturing and construction sectors, which attracted record-high FDI last year.
We have relatively stable economy. We have skilled labor that still remain relatively cheap, affordable. We also see a quickly developing and completing infrastructure development.
The development of industrial properties also facilitates FDI into other sectors in the real estate market.
Khi phát triển các khu công nghiệp thì sẽ hình thành ra những cái khu vực ở, những cái đơn vị ở, kéo theo cái việc phát triển các cái hệ thống hạ tầng như là hạ tầng kỹ thuật, đường xá giao thông, các cái trường học, trạm y tế, chợ búa, trung tâm thương mại và những cái dịch vụ vui chơi giải trí.
To meet the increasing demand of domestic and foreign tenants, industrial park developers need to improve their infrastructure and logistics and provide sufficient services.
A good example for industrial is that VSIP have been very, very successful in Vietnam to create environment for tenants, for occupiers to come into their parks, where they deal with a lot of the administrative procedures. So they help them set up the business, they help them deal with the local authorities to get all the necessary licensing procedures.
According to a recent report by JLL, more than 1,300 hectares of land has been reserved for industrial zone this year as part of the operating zone's expansion plan. The rate of occupancy is expected to continue its upward trend thanks to high demand and positive GDP growth.
One of the segments that attract foreign investors is industrial property development. What can you tell me about the recent development of this segment?
So the investment from foreign FDI into industrial property, let's say, has been very large. So in all the major industrial locations, whether it's port or inland, so from Haiphong through to Bac Ninh, through to Quang Ninh, Hanoi, down south to Da Nang and Binh Duong, etc. So we've seen a huge amount of demand for the property, so from the manufacturers, so whether it's manufacturing electronics or parts or automobiles or etc. etc. That high end, particularly in the electronics sector, we're talking about quite high tech manufacturing sectors. So they have a high demand for high quality industrial property. So a lot of the industrial investment at the higher end sector has been from established industrial property investors. Again, sorry to sound like a broken record, but from Singapore, from Japan, from Korea, etc. So who've been very familiar, and they, again, those home countries connections help to bring in more and more investors from those home countries. We've actually seen a second phase of industrial manufacturing investment. So the majority of the large established household brand names may be here already, maybe are expanding their properties, are expanding their manufacturing operations here. But we also see let's say the second, third generation companies, some of the smaller organizations looking for that presence here in Vietnam as well. We work closely with our Japan office on the industrial sector, and it's sometimes let's say some of these second, third tier companies that are now showing very strong interest in bringing manufacturing operations to Vietnam. The foreign interest in industrial property, it could be close to road links, it could be close to the city, airports. We've also seen industrial investment in the ports, for example, Haiphong with Deep Sea, with some European investment as well. So we have some Belgium foreign investment into Haiphong with the Deep Sea port, and the industrial zone around Haiphong as well. We're following it very closely with interest as well. We see it as a huge growth market for this year and going forward.
Traditionally, that segment only involved domestic investors, but now we see an increasing demand from foreign investors as well. Why is there such a change?
So the increase in foreign investment into industrial property has been partly due to the demand from the manufacturing companies who have been looking for perhaps more sophisticated industrial property. So we've seen an increase and expansion of some of the more established industrial zone developers coming into Vietnam, particularly from Singapore. Some organisations are now have quite a large portfolio across Vietnam from north to south. So partly demand from the manufacturing companies themselves.
2017's FDI attraction is expected to continue to grow in 2018, especially after Vietnam successfully organized the APEC summit and negotiated the Comprehensive and Progressive Agreement for Trans-Pacific Partnership. Due to these developments, experts also expect the real estate market in 2017 will be more optimistic from the perspective of quality growth of the market, as well as attracting real estate FDI in recent years. Following a record number of merger and acquisition or M&A transactions in 2017, Vietnam's real estate market will continue showing appeal to foreign investors. M&A activities will reach new record highs in 2018. According to JLL, hundreds of millions of dollars are waiting to be poured into the market in most segments, including residential, office, retail, hospitality, and industrial sectors.
Just as a prediction, what segment do you think will lead the market in 2018?
It's a very hard question because it's almost like every sector has its real benefits. A lot of it is driven by the expertise of the particular organisation, and in terms of pure scale and pure dollar figures, it will certainly be the residential sector, mainly because of some of these large-scale township developments that we're seeing strong foreign interest. So we're talking 10-15 year projects over the size of several hundred hectares, and perhaps one recent signing was around about 2.5 billion from a Japanese investor. So that's going to be the largest dollar number, but perhaps we'll see strong percentage growth in areas like hospitality. So the hospitality boom which we're seeing is 30% year-on-year international arrivals is huge. So there's going to have to be much more investment into the infrastructure, so airports, carry capacity, domestic tourism growth really booming as well. So I expect places like Da Nang to continue to hit the headlines, more and more M&A transactions, more and more high-profile hospitality developments as well. Growing population, rising GDP, rising incomes, good demographics, good sectors in terms of retail spend and office properties. We have a very dynamic hospitality market. So we saw around 30% increase in international tourists last year. So a lot of the interest we see is for resort properties and hotel investments particularly. So we're very bullish and very positive about the interest for foreign investment into Vietnam going into this year and going forward from then onwards.
What measures should be implemented by both businesses and government to promote FDI into the real estate sector and also make use of this source of capital?
It's, there's huge amounts of opportunity. So a rising tide carries all boats up. So it shouldn't be viewed as a competition or a negative factor for Vietnamese businesses and Vietnamese developers. On one hand, you've got lots of learning potential to be done, so a lot of fresh injections of ideas coming into the country. There's lots of partnership opportunities, so this FDI quite often needs a home in terms of working with the Vietnamese partner. For example, some of the larger ones are joint ventures, and they're working very closely with Vietnamese organisations. So there's huge amounts of opportunities for Vietnamese businesses, both in terms of partnership, in terms of learning, and in terms of developing and improving the quality across the board in general. The government's been very proactive in terms of encouraging foreign investment. All I would say is just keep going more and more. So some of the typical complaints would be transparency, bureaucracy. These things have improved dramatically over the last few years, but there's still some way to go in terms of the ease of doing business, let's say, cutting down some of the paperwork, the bureaucracy, making things more transparent, making it a bit easier for foreign investors to get into the country. Vietnam's been very active in terms of its foreign investment promotion departments. Again, they've been fantastic, but those can continue to be improved and really project Vietnam on the international stage. Legal policies and legal frameworks again have been improving dramatically, but there's always still much more room for improvement in any country. So I'd encourage those to continue to be improved. We've seen increasing demand from individual foreign buyers, for example, looking to buy into the Vietnamese property market. This has been going quite well, but again, could go better in terms of implementation and perhaps some training for implementation, certainly for the regional parts of the country, to encourage that segment as well. That demand will then encourage more and more foreign investment and more Vietnamese development aimed at the foreign buyer market.
Well, thank you so much for being here with us.
Thank you for having me.
The intensive involvement of foreign investors in Vietnam's real estate market is expected to create positive changes in not only products, but also methods on how to sell and promote real estate products. Experts predict that increases in purchasing power and demand for houses, together with strong current capital inflows, will help boost the market's growth in 2018. That's it for this edition of Bizline. If you would like to watch more of our programs, please log on to vtv4.vn or our YouTube channel at VTV4Go. Goodbye for now and have a good weekend.